Hello, everyone. It looks like as we go into the weekend, stocks are going to run right into some pretty key resistance points. So, first off, before we really get into the meat of the video, first we have no new long positions, no new short positions, no new sells in any of our current holdings, and no covers in any short positions that we have, which we do not have any on an end-of-day basis currently. But that means that for 4 straight sessions, we've had zero sells, zero covers, zero longs, zero shorts, and that's the first time that's happened since 2008 for 4 days in a row. We've had 3 days in a row before going back in 2011, and there's been 3 days in a row, one or two times in the past 3 years. But overall, 4 days in a row, that actually hasn't happened according to my own personal research and my own trading diaries going back to at least 2008. So quite impressive what we have here, and that's basically due to the extreme volatility. So that being said, despite the bounce overall and thing that we're going to run a resistance, I do recognize that we do have a few chart patterns out there that look good, like Smith & Wesson Holdings Group broke out today on heavy volume. But just to let you know, V-shaped breakouts like this are not the kind of breakouts you want to buy unless they come from an extremely long base. So this isn't really anything I'm interested in unless it can base out sideways for 1 to 2 weeks, let that 50-day moving average catch up to price. And while it bases out, it needs to have green bop the entire time because the market just still is just too volatile for me. But I recognize that's a good pattern. ANFI off the lows, Amira Nature Foods. This is a good, decent growth stock, has strong earnings and sales growth. That's a nice potential bottoming pattern. SPWH, decent breakout. No way I would ever chase a V-shaped move like this when it's up 8% in 1 day in this tape. But I do recognize that it's a decent pattern. And then ATVI had a good day today, but once again, V-shaped breakout, so far away from the 50-day moving average, not interested. Stocks like CYBX look good. It's consolidating sideways, building a right side of a consolidation pattern, but it's going to really need to work out sideways a lot more and get that 50-day moving average closer to price before once again, I'm interested in this long position in this kind of tape. Also, IOSP, another nice, decent pattern. Nice green bop is growing on the bottom here, which is good to see with the above average volume. So, there are some patterns that are trying to work out, and if the market can back and fill a little bit sideways for a week or two and then break out, I'm sure a lot of these stocks would be potential long positions along with Post, which is not breaking out to new highs yet. But this is a stock I would like to get long, but I don't see any tall pocket pivot point signals over here at all, thanks to that above average volume on the pullback. And like I said, the pullback, if it was really good right here, it would have had below average volume. So even this nice pattern in this historically industry group that does well in a bad market environment isn't really a good long position here. So while we do have some nice stocks, I've just showed you basically everything that I'm looking at right now that looks good. And I hate to tell you, anywhere from 5 to 10 stocks out of 10,000 stocks is not really comforting, if you ask me, if you really believe that the market's just going to continue to rally here. So let's get back to the indexes and really look at where we're at. The NASDAQ, as you can see, is about ready to run into its 200-day moving average, which is about ready to roll over with the 50-day moving average coming in towards it. So we might get a death cross pretty soon on this average. We have bounce on lower volume each day that we've rallied. So the first rally attempt day was the 26th. I do not consider the 24th day one. Reminding everyone, we did not close near the highs of the day. For this to have been a down day and then be considered day one, we would have needed to close near the highs. We did not. So day one was on the 26th, volume overall lower than the sell-off. Then the next day we're up, volume's lower. Today, volume's actually below average today as we come to the 200-day moving average. Looking at the momentum oscillators, we still don't have a hookup in stochastic, so it can continue to sell off if it wants, but we are oversold. I'm not stochastic, excuse me, MACD, but we are oversold. Same thing with TSV, we're down there. Now looking at stochastics, we've got the slow hookup. RSI, we've got a hookup off the lows. So a continued rally attempt, would not shock me whatsoever. The best thing to see if we're going to actually see this market rally is for us to move sideways here, back and fill at least to these lows right here. But technically, in a good, bottoming setup, you normally need to test the lows, if not break to new lows and then recover, and that's all the way back down here to the Monday low a day. So we're quite a ways away from that right now. So right now, I believe it's just best to have an open mind towards this market. But the Nasdaq and Nasdaq 100, they're running right into resistance and lower volume on the bounce, so that's not good. But what's even worse is that all the other indexes, they're nowhere near even key resistance points. I mean, before they really start to get in trouble. The NYSE has a bounce slowed out a lot today, but you can also see volume is dropping each day. Like I said, we're oversold, so a bounce, continued bounce should be expected, but man, we've got now a downtrending 250-day moving average and those gap down days to deal with. Major resistance at the July lows right here too, so it's going to be a rough shot for the S&P 500 and New York Stock Exchange, because once again, the S&P 500, same similar resistance points it's got to work at. The 50-day moving average is now below the 200-day moving average, so we have a death cross on the S&P 500. So we're going to have to deal with that resistance at some point in time. And like I said, if we deal with that resistance, chances are we're going to probably retest the lows. And for a good bomb to happen, we're going to have to back and fill. It just seems too early, but the one good thing that I did see is that this week on the Investors Intelligence Survey, bulls have dropped all the way down to 31.6%, while bears have rallied up to 22.5%. Bottoms happen when normally they cross. So if we can ever get, let's say, bears to 31% and bulls to 22%, yeah, then I'll be looking for a solid fall through day to work. But it seems like it's pretty early to be expecting this market to bottom. And then even more worrisome, obviously to me, the most important index is the Russell 2000. It is inches away from going under a death cross. Also, while its MACD and TSV is at the lows, it also is not curling up, but stochastics is starting to round out off the bottom along with RSI. So we could get a continued further bounce. I just don't see how we make much price upside accumulation whenever we have to deal with these major resistance levels, which are all going to coincide with each other. You're going to have the July and August breakdowns. They're going to basically match up to a death crossing 50 and 200-day moving average. That's going to be quite formidable resistance level to go ahead and break for this market. So there's a lot of technical headwinds. Technically, what we're looking to do is to get short any kind of bounce failure. So let's say the market does continue to rally for a couple more days on, let's say, light volume, and then all of a sudden we have another break on heavy distribution. Well, then we're going to be looking to go operate in either SQQQ, SPXU, SDOW, I'm not sure, TVIX, UVXY. We'll be looking in something. We're still long BIS, SRTY, and TECS. We didn't get our positions in DXD or TVIX, but they continue to work. So like I said, with this dead cat bounce, I'll be looking to short it on an end-of-day basis. If we don't get any short signals, then the one thing that we'll continue to do is just focus intraday. The volatility index is still relatively high. It's still above 20. We normally like it to be above 30 for day trading the indexes. So with it back above 26, we'll want to see a move in the market. But even then, really the only good play that we got intraday on any of really our day trading end was whenever we got the reversal late day on the 25th following our big powerful move higher, our late day fade in the final hour was shortable. Outside of that, I have not been able to really gauge excellent entry levels intraday. But what does continue to work is that stocks that are in play. First off, since being in play, Ford from $1.10 goes all the way up to $2.91. Great move on the upside in 3 days, about 150-200% move in between there, depending on where you got long. Everybody in the day trading chat rooms were all over it. Contract win, and then spun out yesterday. Put it in our video as it was one of our top shorts to watch. Put it in our website, flagged it as one of our best shorts to watch. Unfortunately, Interactive Brokers did not have any shares to short. SureTrader did not have any shares to short. And Ford, though, if you were able to find shares, maybe Centerpoint had them, it was able to fall 28% today, and we expect it to at least back and fill a lot of that, especially if the market gets weaker. But like I said, we're running into some key resistance. I just don't think that we're just going to break out in a V-shaped formation straight to new highs. There's still a lot of damage out there. Netflix is one of our stronger looking ones, but when we look at some of the other leaders like Google, that's pretty rough. Priceline, Apple, these are some pretty banged up charts. Visa, Bank of America, Goldman Sachs, Walmart, for instance, So some of these bigger time stocks, they don't look that good. And they look really rough, and I just don't think that we're going to be able to fight through that anytime soon. It's going to take time. See you on Monday.